Are you back with your Global Business Report this Thursday, the 13th of February? U.S. President Donald Trump promised an America First policy agenda while campaigning, and so far he's delivering on that promise since winning the election. What does that mean for the African continent and Nigeria in particular? A new report released by Sterling Asset Managers Trustees Limited looks at the Trump 2.0 administration and what that means for Africa's most populous black nation on earth. Dr. Patrick Ejumedia, the head of research at SCMTL, joins me now to take us through that report. Quite robust. Good morning, by the way. I shouldn't lose my courtesy. It's good to have you here. Your report looked at the inflation trends, and Donald Trump, from everything, from the tariffs, it looks like it's going to be kicking inflation to the upside. You saw U.S. inflation yesterday for the month of January, so perhaps the genie is going to get back out of the bottle when the Fed thought that is being contained, and we're going to go easy on interest rates down in 2025. Now that looks like a bit of a pullback from what we saw yesterday. I mean, markets started getting nervous all over again. So what do you mean? What do you see against this in your report, by the way?
Okay, so I think the Fed too, they've been suspicious about what the Trump administration is doing, and that's why they refused to cut the rate in their January meeting.
Waiting for who wins the election.
Waiting for
and
who
what
wins.
happens.
No, they had their last meeting in January.
Oh yeah, yes, in January.
So they waited. Out. So they were waiting for how the trade policy, the trade tariff was going to play out. So they were already waiting for that, and that's why they had the rate. But again, now that the inflation result is out, I'm sure that wherever they are seated now, they'll be saying, no, they did a good job by holding the rate, because they're also expecting that February inflation, March inflation is likely to go up. And don't forget that they've already said that from their initial four rate cut for 2025, they've cut it to 2 for this year. So with what is going to play out now, maybe they will just be doing a rate cut towards the end of the year.
So we're not in a hurry, as Jerome Powell said 2 days ago.
That's what he's saying.
Oh, that's quite disappointing to a number of folks, because everyone thought that would be. So there's no hurry to cut interest rate. It's just 1 month. But does rising U.S. inflation change the game in any way? Will it?
Well, what that will mean is that it will just be holding. What they will mean, it will continue to hold the rate at the moment. Because like I've said, the essence of them is to achieve their 2% target that they are pursuing. And since October, we'll see that upward movement in the U.S. inflation. So what that means is that it's not going to change the game. If it will change it, it's going to be probably upward. But for now, they're likely to hold the rate, and maybe till sometimes ending of the year that they might not be talking about a rate cut.
So the narrative for now everyone should hold is that there is no speedy rate cut this year.
Basically. Because people are looking at how the tariff policy is going to play out, globally and in some
on currency,
inflation, GDP, inflation, and the likes. On trade.
Very top time. Yes, you're on trade. So Trump is talking about applying tariffs, and thank you for this very interesting narrative and the charts you've put together in your report. So it's going to apply tariffs to every country in the world that the U.S. has a trade deficit with. Your report featured that table, and that's what we're looking at on the TV screen now, looking at the key trade partners to the U.S. in if you discount Israel whatsoever, with a trade surplus, they were facing the highest risk. Who do you think here will be the most hit?
Of course, we know that since the coronavirus, COVID era, the US economy, the Chinese economy has been suffering. They've not been able to get out completely from that effect. So with this kind of trade policy war, they may be the most hit. And except maybe we see what comes out from the 30 days pause that they are currently doing on the trade policy between Mexico and Canada. Yeah. And a lot of countries will be sitting on the table to do some form of negotiation.
To see what happens again after 30 days.
Exactly, and they'll be sitting on the table to do some form of negotiation, and that is going to tell us what is going to play out eventually.
It is going to be a very tough time for policy makers and leaders around the world. Do you agree?
Basically, yes. Because everybody is sitting to watch, and don't forget, because of the role America plays in the global space too.
So when you talk about trade, the supply disruptions that will likely happen, how does that factor that in that chart in your report?
Yeah, so
because the supply trade disruption is looking like a wobbled, putting a spaghetti in hot water. That's what it's looking like.
So as you can see
on the left,
as you can see on the chart,
yes.
What exactly happened was that we tried to present a scenario of what happened between 2016 and 2019 before COVID, and we saw that between 2016 and 2019, a similar reaction, a similar case actually happened, and that led to a disruption in trade. And how would that affect trade? We are saying that it's going to disrupt supply. And of course, I think that point is very clear. It's going to affect cost of raw materials, and that's going to put production costs up, and it's going to bring about new shifts, shift in suppliers. Producers are going to be looking for new countries, new frontiers, where, for instance, they are looking for those countries that are not taxed or that tariffs are not imposed on, to begin to look for those countries to supply them of whatever raw materials that they are getting.
Interesting. So how much of a bumpy ride do you think these trade disruptions, trade supply route disruptions and all of that will play for Nigeria and frontier African economies that are basically commodities exporters, whether they are on the ground, above the ground, whatever it is, from cocoa to coffee to oil to precious metals, basic resources?
Yeah, so two ways immediately that will just come straight to my head is to say, first, from the point I'm saying. The first is that, okay, because America has imposed, let's say, tariff on China, China may be looking for cheaper countries that they are going to get raw materials from. America's producers, investors may be looking for countries that tariffs are not imposed on, to import raw materials from them. And so that might lead to some of these countries or new investors coming to Nigeria. Coming to Africa.
And start shopping.
Yes, and start shopping. So that's gives us some opportunity. But again, a lot of scenarios are going to be playing out. And until those scenarios start to unfold, we may not be able to say, oh, this is positive impact or this is negative impact. But it has both the wins and gains for Nigeria, and particularly Africa. One
of the biggest ones for Nigeria will be the drill, baby drill. Nigeria is looking at 2.7 million barrels per day by the year 2027. That was the last that we heard in terms of what we want to bring to the table. So that's good. We're putting a whole lot more of our assets in place. News reports that our oil rig count is rising. A number of those divestment by IOCs into the LOC's hands are beginning to yield some extra barrels into the basket. So that's good news for us. But here we come with price, because Trump doesn't want high energy prices for the United States. Saudi Arabia wants it. OPEC wants some sort of not significantly lower than $80 a barrel. Saudi Arabia wants 90. Nigeria can do with 100. But again, oil price is a double-edged sword. It slices this way, you don't hold it well, it slices back on you if you're also important. But we got the Dangote refinery also, and NNPC is also working on his own refinery. So that looks like some good news for us. How do we balance this out for us, for us here on this side?
Like you rightly mentioned earlier, it's a kind of difficult time for particularly Nigeria, because it's a time that we've just got our Dangote refinery working, and we are seeing all other refiners that formerly were not working, they're just coming up. And unfortunately now this is happening. And if this happens, for instance, we've seen the tariff, US wanted to do their increase their production. And what that means is that they're going to reduce demand of oil from the usual countries that supplies them oil, which is basically Mexico and China and Canada, right? So that will push supply into the market. Chinese economy, on that hand, too, are also facing some form of economic crisis. They've not been able to
they've been able to get up to 10. They did 5% GDP for China.
You see what's happening now. So that's going to affect their demand as well.
For gas, for energy.
You see, and that's going to, other countries too are also coming up, discovering oil and all that, and that's going to bring about increased supply in the market. So with all of this put in place, I think maybe except OPEC, like you rightly said, now come back to say, okay, let's do a cut, so that we can also make.
But they're withholding 2.2 million barrels.
But with what is happening already, with what is happening now, at that time they never thought all this was going to come out.
What's going to happen?
Now it's happening. So would they cut further?
If you bring that chart back on oil prices, and over the past couple of years, you look at the price of oil: 2016, 53, 2017, 60, 44, 2018, 45, 72, 2019, 60, 77. Then we got to 80 last year, and early this year. Now we're trading around 70, mid-70, thereabouts, 73, flicking in and out. That's what Trump has brought to the table. So when you look at this uneven prices, and you look at what Nigeria is budgeting for this year, with the president having a big appetite for big spending. That's what I see from Tinubu's administration. We just raised this year's budget to about 50, almost 55, trillion naira. So how do you think we're going to find the money if everybody's pumping oil in the market and demand is sluggish or around a flattish line? how do we do, unless maybe sanctions on Russia, Iran?
So that can be some form of solution for us, But again, if you watch what happened at the time, as of January, when many analysts were forecasting the outlook for Nigeria, nobody saw that this was going to come. Even if they saw that trade was going to put this, they never saw that it's going to be so soon. Coming to power, and just put up the tariff policy and all that. And now that is unfolding, people are seeing. We hope, again, like rightly said, the shift in supply because of the tariff might bring some form of new investors to Nigeria. And if that happens, again, we'll continue to enjoy that increased price. But otherwise, what we will see is that the price is likely to go down, and that's going to affect us.
But some good news, that at least we're able to get the refineries locally up and running. Because I can just assume by now what our import bill will be for petrol. For petrol.
That would have been tough.
It's going to be really, really tough because crude price is low, you've got to import. But again, you need the crude export effects as well to make the budget. So it's going to be much tough time. So we'll just say thank you for the refineries. So let's talk about inflation, the rebasing of the CPI for Nigeria. How would that impact how we measure inflation? Some of my folks says inflation is no longer month on month, it's day by day. And perhaps it's going to minute by minute inflation.
I don't think they are wrong for saying that. Because that's actually inflation. Yeah. Inflation is you walk out of this room and you see price.
What my cup of coffee looked like by the time I came into the studio and the time I'm out of here.
Exactly. So that's actually inflation.
Yes.
But with the new rebasing, first two things that would likely happen is that the outdated commodities that Nigeria, because consumption patterns change on a yearly or monthly or daily or half-yearly basis. So with the new rebasing, the old consumption that what Nigerians on the average do not consume will probably be taken out of those of the basket, and there will be new form of commodities that we consume on a daily that will be put in the basket. So it will bring some form of new change in the consumption pattern that has happened between the last time we had it and now. Then second, it also reflects current prices. Since the twin policy of the current administration, we've seen exchange rate and the unification of the exchange rate and the PMS subsidy removal. We've seen prices going up. So we cannot afford to be staying backward as if prices have not changed. Meanwhile, we know that prices have changed.
Prices have left us. Prices have left us behind.
So it's going to bring the new prices. You are going to be seeing the new prices
into the basket,
and we are going to be seeing new commodities that the consumption patterns will now be reflected in that.
But now folks are wondering what inflation reading will look like if we rebase after COVID-19 pandemic, and we're using 2018, 2019 as the base year before the COVID-19, and then from COVID-19 we're hit a few years later by this double, I don't want to say double whammy, but well, the Americans say double whammy.
It is what it is.
It is what it is. Yes. The exchange rate on one hand and a few subsidy may kick that off the road. So, do you think inflation will somewhat, if we rebase and you look at the products and services and things like that, inflation should get a little bit more moderated in terms of the figure that we see on a month-on-month basis?
So it depends on the weight that is attached to these commodities that are in the basket.
When they come out?
Yes. So unfortunately, we are not able to see the weights now. So by the time the MBS release their report, hopefully we've been expecting that report to have come out before.
Yeah, this is January.
Yeah, but it hasn't come out. So by the time that report comes, I will see the weight that has been attached to some of this, and that will give us an idea of what.
Okay, quick one. So how do you think MPC should decide next week? Wow. 19 and 20.
Yes, I think first, like I've always said, they are going to look at the numbers. And the numbers has to do with what this CBN has identified as the major determinant of inflation in Nigeria, which, of course, is exchange rate. And we've seen that appreciation in the exchange rate since the last time they had the meeting till now. We've seen the appreciation. Then again, there's also the January effect, that usually affects demand. In January, there's usually low demand and all that. So all of this playing out, most people think that they're going to hold.
Low demand when everybody spends so much money in December.
Yeah, but that's for December inflation. We are looking at January inflation now, and that's why December inflation went up to about December 34.8. That was though
because you guys went to town. And you just blew Lagos to pieces and Abuja because you spent so much money.
It's not out of place. It's the season.
Dr. Patrick Ejumedia. Okay, let's leave it there for today. We're just keeping an eye on the GDP and inflation data. Let's hope whether to come before the 19th and 20th. Maybe something in the hands of.
Inflation is likely to come out by Saturday 15th, every 15th.
Okay, that's going to be something to read over by the MPC members, and then they'll let us know what happened.
Yeah.
Okay, great. Have a nice day.